Welcome to Commodity Wrap Kickoff, produced by Rural Radio, Channel 147. This morning's show is live, and we're taking your calls. If you have a question, call us now at 855-RR-ON-147. That's 855-776-6147 to reach our studio. Now, here's your host.
All right, let's start another pot of coffee this morning. How about it? Big Friday here. And sitting in for Scott, the cow guy, Shellady, I'm Tony St. James. Again, that number for you if you want to get in and visit with us this morning, 855-776-6147 or 855-RR on 147. All right. And need to press 1 to hit the studio. Is that right? Okay. No? Hit. Okay. We'll find out. Call in anyway. All right. Scott will be back in on Monday. You know what? We've got a special guest this morning. Always enjoy visiting with Craig Bolanos. Hey, Craig, are you there?
Yes, good morning, and a very happy Friday to you.
Well, it's been an interesting week, and, you know, if we just look at the row crops, those don't seem to be doing a whole lot. Obviously, we see a lot of volatility in the livestock markets, but you're watching everything across the board. So what's on your agenda? What's on your radar as we wrap up the week?
Well, as we wrap up the week, I feel like I went from Wall Street to C-SPAN because I feel it's geopolitics that are once again in the crosshairs. I haven't seen the potential for a president and a Federal Reserve chairperson to be barking at each other, the likes of which I've seen since the 1970s, and I'm paying attention to some things in the bond market, which is getting a little worried about inflation because I think people are worried that we're going to have a repeat of Burns. Burns was the Fed chair back in the day who lowered rates far too prematurely, respiked inflation, helped carve out the entire Rust Belt in America. Flashback to those who were around to how bad the 70s were. I don't think it's going to happen, but there's some parallels that are shaping up on Wall Street right now.
You know, Craig, I'm just kind of thinking off the top of my head right now. We have a Fed chairman who doesn't at least publicly come out and say he's ready to lower rates, but you have a president who is saying we need to lower rates, and then you have the market. What's the right path forward? Is it a cut in the rate?
Well, the right path forward is no politics for the Fed. The right path forward is to embrace this U.S. economy that is so incredibly resilient. But I'm going to give you another idea, my friend. You know, there's all these Federal Reserve Board members, and I just saw Federal Governor Waller call for a 25 basis point cut in July. He just said that on TV. And I said to myself, there's no way he wants a 25 basis point cut in July. He's probably vying to be the next Fed chair. You see the interhuman politics? Here's the bottom line. The bottom line is this country remains great. Don't bet against the American farmer who feeds us. Don't bet against the American CEO. And, of course, never bet against the American consumer. And I think that American consumer is going to be a little bit stronger this fall because when you don't tax tip income and you don't tax overtime income, that's going to put more money in people's take-home. And when people have more money in their take-home check, I mean, do you think they save it or do you think they spend it? Oh, no, they're going to spend it. So I think consumerism is well alive in the United States of America.
Well, and that's the consumer side, but you try to help people put it back. Wealth advisor at Vestian Wealth Partners. What's that? What is Vestian Wealth Partners? What are you doing there?
Well, you know, Vestian Wealth Partners stands to do something. We want to make sure that everybody gets a family office experience. See, everybody can invest, but what people really want, I think, when it comes down to, is they want to take this lifetime of work, this lifetime of savings, this lifetime of growing, protecting capital, and they want to find a way to turn it into an income stream that they can never outlive. And they recognize that the enemies when it comes to their retirement and their financial freedom are things like taxation. So what are we providing? We're providing tax strategy, estate planning, retiree health care, cash flow modeling, and all the investment advisory services under a fiduciary standard under one roof. When you bring that all together, you get a family office experience that helps people get retired, stay retired, because no one should be surviving in retirement. Everyone deserves to thrive in retirement. That's the American way.
I love it. And where would we find you, Invest You in Wealth Partners?
We'd love to connect with our listening audience. We love this show. We love what the show represents, and you can connect with us anytime at getretiredstayretired.com. That's getretiredstayretired.com.
And I'm going to throw a last-second curveball here because I've kind of driven the conversation the whole way, but this is more of a just look out the front window, if you will. Are there any other things that you're watching as we really are in the second half of the year, but it's moving on pretty quick? Is there anything else that you've got an eye on?
Yeah, I've told people pay attention to the subtleties that are here. This Federal Reserve issue is potentially a real issue, but I think it's going to blow over. Understand that everything on trade, just because things aren't as bad as anybody feared, doesn't mean that they're good. They're two different things. We don't have that stuff settled. But pay attention to the trend, because too many people have been worried about a recession in 22, 23, 24, 25. I've got news, everybody. We're not having a recession in 25. The soft landing still exists. So unpackage this tax bill. See what you can do in terms of research and development credits, see what you can do in accelerated depreciation expense, and lean into the growth of America by reinvesting in yourself. I'm talking to all the business owners out there and to the consumers. Don't fret. The jobs market remains strong, but expect some softness coming into the second half of the year as companies do start to do some additional layoffs at the margins, not because AI is replacing people, but because CEOs need more money to invest in AI, and it's going to have to come from somewhere.
Craig, maybe I just need your voice in my head as I'm trying to go to sleep and it's running at 1,000,000 miles per hour on what about this, what about this, what about this. You're so calm, you're cool, you're collective. Website again?
GetRetiredStayRetired.com. That's GetRetiredStayRetired.com.
That's Greg Bolanos. All right, you're listening to Commodity Wrap. How about we take your calls, and we can also get your messages too. 855-776-6147. We're back with more Commodity Wrap Kickoff in a moment.